NEOBANKING, a digital bank panel discussion is Mr. Jatin Joshi, Executive Director, Head Cash Management Product India at Standard Chartered Bank. And our panelists are Mr. Anish Achuthan, Co-founder and CEO of Open Financial Technologies, Bankopen, Ms. Shalini Warrior, Executive Director at Federal Bank, and Anjani Rathor, Chief Digital Officer at HDFC Bank. Over to you, Mr. Joshi.
Thank you. Morning, everyone. My name is Jatin Joshi. Uh, Together, we are actually going to present the NEOBANKING Digital Bank. Let me introduce myself. Seasoned banking professional, about 3 decades of experience in wholesale and retail banking. Worked with a local and global bank across geography. And we have 3 industry experts. Shalini and Anjani representing the banks, and of course Anish representing the Fintech NEOBank. They're here to share with us their experience in neobanking, digital banking space. I'm sure the session will help us to understand, learn on the journey evolving and the evolving models, regulation, challenges, and the opportunity the neobanking provides us today. Let me quickly take an opportunity to introduce our esteemed panelists. So on my extreme left is Shalini Warrior. I think she's known to a lot of people around. She's currently an executive director and business head for retail banking in Federal Bank, a leading private sector bank in India. She leads, among other things, the digital banking, the fintech strategy for the bank. Shalini has been with Federal Bank for about 7 years, prior to which she worked with Standard Chartered Bank for almost 25 years across India and overseas location. Federal Bank ties up with Jupiter and EPFI as of now. EPFI. Okay.
Epify.
EPFI. Thanks for the correction. Uh, in middle we have Anjani Rathor. Anjani is the Chief Digital Officer for HDFC Bank. His mandate includes driving adoption across the businesses. Prior to joining HDFC Bank, Anjani was with Airtel as the CIO of consumer business and as the product and operation head of Airtel Money. Anjani has worked in various capacity at Boeing, Accenture, and Citigroup. So that's a wide spectrum, Anjani. To my left is Anish. Anish is the co-founder and CEO of Open Financial Technologies, which is called Bankopen. Earlier, he has held a senior position in many fintechs like PayU, Citrus Payment, On Mobile. He has vast experience in the area of mobile and digital payment solutions and co-founded a number of payment fintech companies in past. Uh, so without further ado, let me jump into I'm sure most of you are aware what neobanking is all about. Neobanking, digital banking interchangeably used. Are banking services provided completely digitally, so they do not have physical branches. All bank services are provided online, which includes even the customer services, payment, onboarding services across. Globally, there are two models wherein they work as per the local regulation or licenses is provided. The other one is a partnership approach. And in India, largely in absence of any regulatory framework, this works only on the partnership mode. There are various models which are evolving in the country, which is basis the market segment and target audience, which could be millennials, teenagers, SME, MME, credit-led model, savings account-led model, technology-led model. So this is an evolving space, and I think it will be interesting to find out where we are going to land. So my question is to everyone, and I can start from Shalini first. With so much happening in the country, right? Digitization drive across economic, socially, payments, 24/7. We have the best payment systems in the world. We have payment bank. We have small finance bank. How does the neo banking fit in?
Thanks, Jatin. Indeed, an honor and a pleasure to be here on behalf of Federal Bank. First of all, congratulations to NPCI and the other entities for having put together this platform. I think it's phenomenal what one has seen and heard of yesterday and what is being experienced today and tomorrow. So kudos to the organizers for that. So Jatin, coming to your question on, what kind of role does something like a neobank, digital bank play? And I think the terms are used a little interchangeably. The topic itself is probably a little kind of a complex one, which says neobanking, a digital bank. But let's use the terms a little interchangeably. I think, first of all, the way we see it, at least from Federal Bank perspective, is there is a certain profile of customers who have literally been born digitally native, who are literally, as I say it, born with a mobile phone in their hands probably. And that set of customers expect an experience which is sometimes different or difficult for the so-called traditional banks to provide. I think customers are expecting the ease and convenience of how we order food on a Swiggy or take a cab on an Uber, but with the trust and security of a bank. Because at the end of the day, this is money and it's not a small ticket item. So I think there is this profile of customers who have begun to expect that. And to a large extent, where Federal Bank is approaching it from, and is that that profile of customers will be best served through a collaboration between a fintech and a so-called, and I keep saying so-called because I think a lot of us are not any longer traditional in that sense, but let's, for the purpose of today's discussion, call ourselves a so-called traditional bank. So that bringing the best of both those worlds is what I think the world is getting into. Clearly, fintechs are able to bring in an insight into customer needs and agility, to some extent a flexibility, a speed to market, user convenience, which sometimes banks may find it difficult to do. At the end of the day, however, the bank is the platform on which this has to ride, and there is a regulatory framework around it, as well as the trust and security that comes from it. So the way I see it, it's not an either or an or. It's not either a physical network-oriented bank or a digital-only bank. My sense is, and the way I see it is, it's both of them need to work together and bring the best to the consumer. And I think we either leave the choice to the customer. The customer may sometimes choose to do only digital, may sometimes choose to do both digital and physical, but let's leave the choice to the customer. And that's how I see this world evolving, of a more collaborative slash cooperative kind of arrangement rather than one or the other.
Okay. Anjani, you would like to add anything?
Yeah, just to take this forward from where Shalini, what Shalini mentioned. See, today in a traditional bank, there is a lot of digitization initiative that is happening. And each of these incrementally will improve and make the bank a lot more engaging and a lot more efficient over a period of time. But there is another paradigm. Instead of incrementally improving things which are already there is an opportunity to create a completely digital bank which will establish a very new operating model. Can we set up a bank where a customer doesn't have to walk into a branch, but can get onboarded seamlessly on any of the products, savings account, current account, take a loan, without walking into a bank branch, just through digital interfaces? Is it possible to enable all transactions wherever the customer is 24/7? Is it possible to offer all the servicing to the customer without even that customer taking a step? So this is about establishing a new operating model, which will not have a customer care which goes up with the number of customers that a bank has. Establishing an operating model where you don't have a large operations team just curing the failures which happen, or having a large fraud and risk control team which is trying to monitor. Can we do it digitally in a manner that it is safe, it is engaging for our customer, it's easy, just like making a UPI payment? Can we enable that kind of transactions? So these are two distinct models actually. One requires a complete reimagination of how banking has been thought through, and that is why we see that there is a place for both. Today, 99% of the customers or citizens of this country are on traditional bank, and they deserve a far higher level of service and engagement. And banks have their duty to provide this, and therefore a lot of digital initiatives are happening across the bank. But at the same time, there is a new set of citizens who are emerging, who are completely digital native, who are, do-it-yourself generation, just like IKEA furniture. IKEA sells furnitures. They want to create their own product, buy it themselves. So can we do it yourself banking on phone or through various digital channels and create a bank which exists in the cloud like this? So both are necessary. The other one, yet the paradigm has to emerge. A lot of us are doing reimagination. Every bank, every fintech, a lot of other stakeholders, including the regulator, is thinking how to make this happen. But this is what is needed to make every citizen in this country banked. Otherwise, the first model has got some limitations. There is a cost, efficiency which comes into play to push it to the last citizen standing. The other model should be such that everyone can get banking anytime that they want.
Thanks, Anjani. Anish, over to you. You want to add anything to this? Being in that area, why do you think, where does, neobanking?
I think neobanking also has evolved over the last 4 to 5 years. So when initially it got started because of the legacy challenges banks faces, wherein the digital first or digital native set of customers, they required a different kind of an experience. And that's where some of this fintechs or so-called neobanks started out with. But today now the same technologies are available for the banks, especially when in launching in digital banking solution. So what is more important is that, but at the same time, each segment of this customers requires a different set of experience. For example, on the SME side of the customers, what companies like us and our peers are trying to solve for is the financial automation challenges which they faces, which is probably not being solved for the banking. Or when it comes to the consumers, probably like for a set of like the millennials, they're kind of like the experience or the products they are looking forward is different. So definitely there is an opportunity for fintechs and banks to jointly create solutions for each of these segments. I mean, I just also want to make one example. For example, take an example of an ONDC. There could be commerce solutions or other non-banking related solutions which is important to cater to that segment, integrating with ONDC and things like that. So this is probably where more maybe it could be a collaboration of banks and fintechs that could actually look at this opportunity. So that's where I do see the opportunity for neobanks today in the market.
Thanks, Anish. So basically, just to summarize, I think what we are saying is that there are client expectation is a bit different from the earlier banking experience, customer experience. And, if you add value-added services, I think this could be very useful, and both will have to work as a partner together. Okay, that's interesting.
So can I just add one
Yeah.
thing, Jatin? And I think, as I think Anish alluded to, some of the models are also evolving as we speak in India. If you cast your net a little wider and look at it from an international perspective, again, we see different models. There is one model which is the Monzo Revolut kind of model, which are standalone digital banks been licensed by their regulators, etc. There is another set which is between Singapore and Hong Kong, etc., which are the so-called traditional banks. Your bank, Standard Chartered, for example, has Mox in Hong Kong, which is a digital bank within a bank. And in India also you see those models. You have a Kotak 811 or a Yono, which to a large extent is digital in its orientation, but embedded within a bank. Whereas we've got Federal Bank in partnership with Jupiter Epify, which is a different model. So I think some of these models will also evolve over time. Ultimately, I think it will really boil down to customer expectations and customer requirements overlaid with the regulatory framework. So I think that's where we are evolving to.
Thanks, Shalini. I think that brings me to the next direct question, which we spoke about. I think the question is more in terms of the regulatory requirement, right? As a bank, we have a responsibility towards fulfilling the regulatory requirements. So basic questions like, who's responsible in a partnership approach to meet the regulatory requirements, and, likes of customer data or their security. And the most important question is, who's the owner of the client at the end of the day?
Yeah, I'll take. So very recently, so earlier there might have been some ambiguity, but recent, diktats which are coming out from the regulator as well is clearly pointing to the fact that the regulated entity needs to ensure adherence to all the regulations for any product and service which is being offered to the citizen of this country. So that is completely unambiguous. There is no two ways about it. However, the real challenge that comes in is when you create a digital enterprise, it is built on a premise that a customer can be brought in with one product or one hook, and then there is an opportunity to monetize with that same customer base with very many products, which could be banking and non-banking. And this monetization depends on data, access to data. And that's where the challenge comes in, that who has the access to data to monetize the customer. Here again, thankfully, with the progressive regulations that we have here, India is taking a big leap in terms of data privacy and data protection, where we are making it very clear as a nation that the data belongs to the citizen of the country. It doesn't belong to any enterprise. It doesn't belong to any one company or the other who's acquired. And a customer has the ability to give consent to use that data for any product or service. So that's an amazing capability that is getting created with the likes of account aggregator, which is coming in. And therefore, that allows a safe framework for sharing data across entities. This will solve that problem of data monetization. So for all banking products and services, banks will be happy to request the data from the citizen and provide them services. Likewise, non-banks can also play a role. And if that same framework can be extended, a non-bank will be able to provide value-added products and services to the same customer. So that will get resolved over a period of time. We still have to wait and see what shape and form this whole data protection bill comes out in. But this should be the way forward.
Shalini, you want to add something?
So I think, Anjani has probably covered most of it. But just to kind of bring it together, at least in our mind, one, I think there is no ambiguity about the fact that it's the regulated entity that is responsible for all aspects of regulation, whether you look at KYC, AML, transaction monitoring, fraud prevention, customer confidentiality, data privacy. There is no doubt about it. The regulated entity is and will continue to be responsible, in my view. And that's really where the regulator is also coming in from. Having said that, I think there is a part of it which, the fintech entity or the entity who we partner with should take some of the responsibility also. I don't think we should be irresponsible to say, I'll leave everything to the regulated entity. I will not do anything. It's up to them to. I don't think any of them do it. None of the partners do it, to be fair. And they go through fairly rigorous reviews and audits, etc., to make sure they're on the right track and do it. So I think there is some amount of, even if it on paper, the entire accountability is with the bank, there's no doubt about it. But I think the fintech partner has to bring to the table that awareness, that appreciation, and that aptitude to make sure that the risk parameters are in place. And that's really what we look for when we look at fintech partners. Most partners who work with Federal Bank, as with other banks, will testify to the fact that they go through a lot of rigor and discipline on audits, etc., before they do it. And the other part of it is, again, Anjani referred to it, which is ownership of data from a point of view of KYC, AML, etc., is one aspect of it. But I think the rubber hits the road when it comes to who can cross-sell, what can you cross-sell, where can you cross-sell, when can you cross-sell. And that's where I think frameworks like account aggregator come in very clearly, because they're the power is in the hand of the consumer then. You use account aggregator, get the consent from the customer, and with full transparency and with full consent, share the data and then work with the customer on that. So I think I split it in my mind into two parts, but overarching it, the regulated entity is and will be responsible for regulation.
Yeah, thanks, Shalini. Anish, you want to share your experience, because regulation when it comes to fintech could be quite an interesting area, right?
Right. So from a fintech perspective, it's very obvious, as Anjani and Shalini mentioned. Ultimately, the bank is the regulated entity, and they are responsible for this. But at the same time, I feel like Shalini, there should be regulation for the fintechs as well, because it's also our onus to actually ensure that. And that's where I feel like that will come in, like the way we have this PAPG and the account aggregator. Similarly, some kind of like a BC kind of a structure, especially for neobanking where they work with, if they can also be licensed, I think that is actually very good for the ecosystem. Now, the other important aspect is on the customer ownership. And this is like a very tricky this thing, because on one side, probably the banking partner would be providing a checking account, but at the same time, maybe a fintech had a different model where they want to cross-sell loans to these customers, maybe through an NBFC partnership, or at the same time, the bank may also wanted to look at like lending to these customers through a different channel. So now, in terms of the ownership over here, definitely, again, as I said, the bank owns the current account or the savings account for the customer. But let's say like using a Google social login for logging into a accounting software, the customer is either can be an owner of two platforms basically. One is with the bank, and secondly he's using the platform for various other services as well. And here again, like it's mostly a collaborative way, or the equation that you have with the banking partner or the approaches, that's what matters in terms of how, in terms of the cross-selling and other parts.
So thanks. I think so. This is an evolving model. In short, I think we'll have to work together as a partner, and probably address this as we go along. So I think
yeah, but if I can just kind of add, sorry to butt in again, Jatin, but I think on the digital lending side now, the clarity is pretty clear. I think RBI has come out, and I think it's really wonderful to see things. And I think to be fair to the regulators, there are certain tenets that have been put in place. KYC is sacrosanct, AML is sacrosanct, customer consent is sacrosanct, privacy is sacrosanct. So some of those tenets are there. I'm fairly certain that in the area of savings and current accounts, some of this will evolve over the next one. But if we just step back and look at it both from letter and spirit of the law, as long as we're very, very clear, we've got some of these, kind of principles in place, whether it's, how you onboard the customer, how you treat the customer, how you get consent from the customer, how you treat the data. I think we're on the right track, is my view.
Okay, thanks. Anish, this question is probably for you. From a neobanking standpoint, I've heard, read reports that there is almost a 5x surge in the funding in recent years. And expected to reach 215 billion by 2030. That sounds very good. But what actually I'm not very clear, there are a lot many people asking me this question. Are there substantial revenue models which is sustainable in the long run? So where do you think, how we substantiate the revenue and the...
So again, like India is a different market when it compared with the Europe and the US market, especially when it comes to the revenue models and the business models. So this is where there is a lot of challenges where neobanks face when it comes to their business models versus banks where they have more control in terms of the CASA deposits and the lending leverage they can have. Now, typically when it comes to, I'll just talk about the challenges, and I'll also talk about how players like us are actually looking at this. So the challenges, for example, the MDR is capped. The interchange revenues, again, is not sustainable in the long term. And there is also regulatory challenges in terms of the other things like the deposit revenue sharing and things like that, which means most of these fintech partners had to look at non-bank related revenue streams. Obviously, there is things with now there is clear guideline from the regulator on the lending side, which is definitely one of the areas. But when it comes to the SME aspect of it, we do believe that there is a lot more business models you can actually build in around subscriptions, in around offering more value-added services to this SMEs, because traditionally there is already an ecosystem of players who are already generating revenues through offering various financial tools to the customers. So mostly on the SME side, even in globally, for example, one of the large players, Condo, their primary revenue stream is through the subscription business model. And most of the SME players, including us, actually follow on that model as well. And then but on the consumer side is probably where I think on the India market, we need to figure out the new revenue models, because apart from the interchange and the account deposits, and lending definitely is huge, but apart from lending, will the customer pay for a premium service? For example, companies like N26 has launched premium subscription services in other markets, but will they fly in a market like India? So these are the at least my view on.
You want to add anything, Shalini?
So I think it's always a difficult proposition when it comes to revenue. Revenue pools are always under pressure, and when it's a collaboration, there is always some give and take. Some part you need to retain as a bank, some part the partner needs to retain. But I think if you step back and look at it, I think again the fact remains that if this has got to be sustainable, it's got to be profitable for both. The banks got to see some bucks in it, some money in it. The partners got to see some money in it. Otherwise, otherwise the customer is left high and dry. Otherwise, so yeah, I think the models will evolve. Anish is right. India's not completely ready for a subscription-driven model, and therefore the real revenue comes from lending. We've got to see what we can do from a lending perspective, and ultimately that's probably where some of the money to be made will be. But it is a challenge, no doubt about it. And I think both partners need to approach it in a collaborative fashion. Be in it for the long haul. It's not something that can happen tonight. And the analogy I draw, Jatin, is if you build a physical branch, I don't expect my physical branch to break even in the next 3 months, right? I expect the branch to take 12 to 18 months to break even. Build up a book and then break even. So that's the way we approach it, to say what's the kind of longer term view, are we adding value from a customer standpoint, and then I think the revenues will come. Difficult, but is something we just need to keep working on.
Excellent. That brings me to another question. We've been talking about having a partnership. We've heard about banks actually wanting to take this initiative internally, right? They want to come up with a strategy of building this by themselves, the digital bank. So what do you think from a bank standpoint are the sustainable model? It seems to me that partnership is the only option which is coming up. Maybe a quick just a option, whether it's a hybrid model, whether it's a partnership model, whether it's a...
I think there is room for both kinds of model right now. This is a fast changing field, and thankfully the regulator in India is a lot more progressive. If you just compare it to China, it came to a level where there was a lot of overstepping between the two industries, the fintechs and the banks, and as a result the regulator had to step in. Alibaba, Jack Ma became just the poster child for that. But thankfully in India the regulation is progressive, and it is drawing a very clear guideline in place to say what's doable, what's not for both sides. And as a result of that, there are certain things, in the end it's the same customer. We are talking about the same customer, just from two different lenses. When a bank approaches a small and medium enterprise, we say, start with a current account, then we can lend you, we offer you many more services like trade. When a fintech would approach, they would say, we will help you pay your employees on time, we will help you collect from your customers. So we will help you grow your business. Oh, by the way, to do this, you also need a current account, you also need a lending support, and here I'm going to plug in multiple banks at the back end, which will provide that. So effectively, both are trying to solve the same problem of the customer. We need to be very clear that who is responsible for what and who can provide what service. And as a result, partnerships will drive certain kind of business models, and there are certain things that banks will have to do on their own. So, if a customer opens an account with us, managing that account, ensuring that it's always available to our customer is bank's responsibility. So we'll have to do both.
So I like that answer, Anjani, and I know what Shalini is going to say. So I'm going to, because I can see that red time up. But Shalini will definitely say it a partnership, and I liked Anjali the way you basically are partnership and possibly on your own. So
I think it's not an either or an or in the interest of it's neither an at least from a federal bank perspective we're very clear it's not either or. We are growing physical branches, for example. We are 65 new branches this year on a base of about 1,200 branches, and at the same time we are out there with partners, etc. So it's not either or. I think both the partnership model is what we're very clearly committed to.
Okay. Do we have some time for one or two questions, or it's time up? One question? Okay. So who's the lucky one? No prize for the questions. Okay. There's one question here.
I can see somebody's hand raised over there at the back.
I'm Jatin. So just wanted to understand your opinion whether Indian consumer is matured enough to trust their money with a bank that does not have a physical branch. And if no, then I mean, what segment of customer you're looking for over here?
Sorry, can you just introduce yourself, please, name, and I can't see from here.
Yeah, my name is Jatin.
Jatin.
Jatin Tiwari.
Okay. And the question is to
Everyone.
everyone.
I mean,
Okay.
anyone who
Okay.
likes to take it.
So, if I have to rephrase, you ask your question is the customer mature enough to understand the digital flow and the ownership and the other aspect of neobanking? Is that the question?
I mean, can a user actually trust a bank that does not have a physical branch over here?
Okay.
This will be a point of view actually, but we all know that the growth in banking is going to come from rural hinterlands in India, and this is true for many of the banks that are seeing big growth coming from rural. And that's one of the reasons that we are also pushing along with the branches. So we are just not making digital, because when it comes to trusting your money, you will not be able to put money into your mobile phone which goes into a cloud and it sits somewhere. You need to know where to go, whom to catch to get your money back. And that trust comes in over a period of time. So digital brands will have to really work hard to build that trust. And therefore, you will need some kind of an on-ground presence to drive digital as well.
I think, yeah, I agree with what Anjani says. I think and I think that's probably why most of us are, at least Federal Bank is, and the other banks are committed to saying that this will be a partnership model. I think there is merit in both the physical presence, giving it a brand identity, and the digital brand building its own set of awareness, you know.
So that's where it's important for fintechs to partner with the bank, because at many times, like for example, when it's a Jupiter powered by a Federal Bank, it actually, the brand value of Federal can be used to build that trust among the consumers rather than a bank which is like not really known to the customers.
Okay. Thank you. That
Right.
was useful.
Thank you so much. Thank you
Thank
so
you
much
very
to the
much.
panel.
you.
Let's have a round of applause for them, everyone.
Thank you very much. Thanks, Jatin. Thanks.
Thank you, sir.